Hello, everyone. Happy new week to you all, and I do hope we all had a wonderful weekend out there. I'm so excited to welcome you back to another episode of our daily series dedicated to price action based technical analysis on the Extreme Speed Live. Well, before we kickstart the session, let's quickly confirm that we are good to go. Let's go through our daily routine by confirming that you can see my screen and hear my voice loud and clear without distortions. If you can do this, please type in hi in the comment section, as this will give me a positive feedback that we are good to go this morning. So I look forward to your comment, please. Thank you very much as you do so. And let's do this quickly so that we can kickstart the session. Okay, so while I load up my comment box, okay, all right, thank you very much, guys. Okay, so I can see Hayas 157, Panov Panoy 0621, Ramona 85, FT1215, Ziad 212. Thank you very much, guys. Kwasid, Julius 75, JTSP 2626, Shahaba Alam. Okay, Backlin, Abdul Kani, good morning to you guys. Nes 57, JMT, thank you very much, guys. I would like to take this as a positive confirmation that we are good to go this morning. And it's on this note, I welcome you all to yet another promising edition of our Extreme Speed Live session. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be dissecting the current market structure from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of the assets we will be looking at for this week. Well, today being the first trading day of the week, this is the most appropriate time and opportunity for you to drop in any assets or instruments you want us to look at for the week, be it cryptocurrency, currency assets, commodity, options, whatever you have there. Feel free to drop them in the comment section, and trust me, I will ensure that we incorporate it into our plans for this week, and we will be following up on that asset day in, day out. So if you have any, let me have them in the comment section. And well, for me, I have a handful of assets which I'm already hoping that I will share with you today, as I have very interesting and insightful setups that we can use to guide our trading decisions for this week. Now, for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning. I know you will be asking, what is this all about and what is it that we are doing during this live session that is running right now? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York sessions. This session usually kickstart 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during this time so you don't miss out on any of the insights that we will be sharing today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section, and let's make today an eventful one. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with us for a while now, you know how important this is, as these fundamental factors will be manifesting on the charts as technical patterns and price movements. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on our impactful event from the economic docket that affects the assets on our watch list. And since I'm yet to see any assets in the comment section, so I will just base this view that we will be having this morning on the asset I want us to be looking at, and these are the United States and the United Kingdom economic docket. Now for today, Monday, November 27, we do not have any high impactful event to look out for. So instead, I had to include the medium impactful event to see if we have any fundamental factor that will be driving the market sentiment today. And of course, I was able to find one coming in from the United States economic docket, and this is expected to come on in about 4 hours from now. So we look forward to the new home sales change. And for those of you who don't know what that is, well, this is a data usually released by the US Census Bureau, and it is an important measure of housing market conditions. So it literally tells us house buyers spend money on furnishing and financing their homes. So as a result, the demand for goods, services, and employees are stimulated. Now, generally, a high reading is considered as positive for the US economy, which in the long run will reflect on the chart as a bullish traction in favor of the US dollar. Now, if we look at the previous data for the month of September, it came in at 12.3%, as you will see here, but we are yet to have the consensus projection for the previous month. So I'm of the opinion that this data will be coming in maybe an hour or two into that session. So we look forward to that one, as we need something to gauge if the actual data came in just as expected, beyond expectations, or even below expectations. So we look forward to see what the actual data will be like. And as technical traders, we do know that the anticipation of this event usually affect the market sentiment, which will then reflect on the chart as price action. So talking about price action, let's dive right into the chart and let's look at things from a technical standpoint. And in fact, the first asset we are going to be looking at for this week, as usual, will be the USOILSPOT. And in fact, I already have a sell position triggered at this point in time, running with about 60-70 pips thereabout. But I will be telling you what led to the decisions that we made and how we intend to capitalize on any potential opportunities from this current market structure. Now, to start with, I will be kickstarting this session on the 4 hours time frame, where I was able to find a simple setup that we will be using to guide our trading decision for the week. And for this week, what I did here was to take into consideration the nature of price action in the last 4, 5, 6 weeks in this market to see what really is going on here. And of course, if you look at the structure here on the 4 hours time frame, it is quite obvious that price action has been on a strong bearish momentum. And in fact, to emphasize this, you will see how price action had transitioned into a descending channel, and after connecting the series of lower highs, we have the resistant line of that descending channel, and when we connected the series of lower lows, we have the support line of that descending channel right here. And whenever we have a descending range like this, we usually want to continue to look out for selling opportunities as long as price action remains within those structures. Now, in addition to the descending channel we have here are a couple of more levels that I was able to identify, which will be playing a major role in guiding our decisions for this week. And one of the important structures here is the $75 area. And in fact, if we look at how the $75 level had played a major role in determining the direction of price action since the beginning of this month whenever price gets into this level. Now, if we go to as far back as the first week of this month, you will see how that level there was serving as a buying niche in this market. Then we saw price break down the structure during the second week of this month. We saw price came back up with an engulfing bullish candle. Then in the last 1 week, we saw how that same level was serving as a buying niche. As you will see, after price got into the structure last week, Wednesday, we saw an engulfing bullish candle spring out of that structure. And in fact, at the end of last week's trading session, we saw how price action came back to close around that $75 level. So you will see how crucial this level is, and depending on what happens around this level will determine where price action will be going. So as a result of this, I'm going to be using my $75 area as my key level for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that support the idea of buying. And if price drops below the key level, we want to be looking out for patterns and structures that support the idea of selling that asset. Now, what I did this morning while trying to dissect the current structure to see where price is likely going, so what I did was scale down into the 1 hour time frame to see how participants in the market will be reacting to that particular level at the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, on the 1 hour time frame, this was what I was able to come up with. Remember, our key level at the $75 area still remains very, very intact right here on the 1 hour time frame. Now, the week started on a strong bearish note. As you will see, price started the week around the $75.75 level, dropped into the key level, around the key level, and of course the $74.80 area, where we begin to notice some buy pressure resume around that area. So in that regard, and with the formation of price action, we have a range to work with where price was confined within the $75.75 level, and that area between our key level and the $75.80 point. Now, with the scenario here, you know how we do it in this community. Whenever we identify a range which emphasizes the uncertainty going on at that point, we want to exercise patience and wait for either the breakout retest of the resistant line of that range to give us an opportunity to buy, or the breakdown retest of the support line of that range to give us an opportunity to sell. Now, if you look at what is going on right now, you'll see that the buy pressure, despite the fact that we saw buy momentum gradually resume around this area, we saw how the $75.30 level negated all attempt by the buyers to break out of that structure. And as a result of this, having a sell stop order below the $75 level, which happens to be our key level, made quite a lot of sense. And for me, that triggered my first sell position for the week. And if you are in any way spotted this and taking advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on that move. However, if in any way you have missed out on this opportunity, there is no point banging your head right now. The week is still very, very early, and there's still quite a lot of opportunity to take advantage of. And in fact, the bearish momentum we're seeing right now may not be the momentum for the week. So this is just the beginning of the week. So let's keep calm and see how the market will play out around that area. And for those of you who took the move, well done to you for capitalizing on that one. Now, for those of us who had missed out on this opportunity, what we want to be doing at this juncture is just to exercise patience and wait to see how the market will react to that area. And let's see if the market will present to us new trading opportunities that we can capitalize on. And what we will be looking out for here, since price action has broken down that zone between the $75 level and the $74.80 area, from a technical standpoint, we expect that some point in time price may likely come back into that range, maybe the $74.80 area or the $75 level, where selling pressure around this area will incite the downtrend continuation. So let's see if the market will come back and retest structure. If we have the privilege of seeing that, then thank goodness we will be part of the downtrend continuation. However, it's not all the time that price action does this kind of retracement phases. In fact, it could continue to nosedive to the downside. And another thing we can look out for is if price continues to the downside and results into maybe a consolidation phase that transitions into either a bearish rectangle pattern or a flag pattern or a wedge or triangle pattern, which informs a downtrend continuation pattern, then we want to be capitalizing on the breakdown of that range to join the downtrend continuation. So let's keep this in mind while we look out for selling opportunities as long as price action remains below our key level. Now, in as much as we're looking out for selling opportunities, you know how we do it in this community. We want to keep a balanced perspective. And considering the fact that the market is a very fluid environment, as traders, as technical traders, we want to be as flexible and dynamic as possible so that we can be on top of our game. Now, in that regard, we have to also consider the potentials that buyers can also come in. As you will see, we saw some attempt by the buyers to build up some momentum around this area, which actually failed. And in fact, it is very, very possible that the breakdown of that line or zone may turn out to be a false breakdown. And if it so turns out to be a false breakdown and it so happens that price takes us out of the buy position back above the key level, then we want to be looking out for patterns and structures that will support the idea of buying. Well, personally for me, since we already have a range at the $75, we have a resistant line at the $75.75 level, I'm looking at that area as a way to join a bullish momentum. However, if it's possible that the market gives us a scenario where we start seeing higher highs and higher lows, giving us the signs that buyers are gradually gaining momentum, we may be able to join a bullish momentum even before the resistance line at the $75.75 level gets broken. So at this point in time, we maintain a bearish bias. We have a sell position triggered, and for those who missed out, we're looking out for new opportunities, and I did mention what we shall be looking out for to join the bearish move. So let's keep that in mind. Mark out this level. But if at any point in time we get taken out of this bearish perspective and then buyers come in, then we already have levels we will be looking out for to join that uptrend move. So I will encourage us all to mark out these levels right now, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever as regards to my explanations or whatever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions while before we move on to the next asset. And you can also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, and in fact we had a phenomenal week on the USTech 100 as we had the privilege of joining both buying and selling opportunities in this market as the 15,900 continues to hold a robust support line for this particular asset. Now, going into today's trading session, of course, going into the new week, a week which happens to be a very, very crucial one as we gradually approach the end of the month. And usually when we approach the end of the month, we begin to see some strange trading activities which usually happens in reversal of the prior leading price action. So we are going to be taking an holistic perspective to see what is going on here from a larger frame before we go into the details on our 1 hour time frame. Now, the first thing we are going to be doing here is to scale up into the 4 hours time frame where the current structure still remains the same with what we saw here during the previous week, only for some little bit of changes as regards to levels. Now, what we did here on the 4 hours time frame was to take into consideration the nature of price action in the last 4 to 5 weeks, and it is quite clear and obvious that price action has been on a strong bullish momentum, and as a result of this momentum, you will see our price action had transition into an ascending channel. So if we connect the series of higher lows here, we have the support line of that ascending channel duly marked out, and then we also have the resistant line of that ascending channel if we duly mark out the series of higher highs here. And besides the resistant line and the support line is this line that slices the range into equal halves, demarcating the upper part from the lower parts of that range, as you will see here. So these lines here will be serving as a key determinant of how we are going to be positioning ourselves for this week's trading session. Then besides the ascending trend lines which gave us the range we have working with for this week are a couple of levels which will be serving as a key determinant of how we will be trading. Now, the most important level here is the 15,900 area. As you will see, this level in the last 2 to 3 weeks had played a major role in determining the direction of price action. Now, if we go to as far back as the second week of this month, you will see how this level was holding selling niche at some point before it was finally broken out during the early part of last week's trading session. And as you will see here, after price broke out of that level, it found a new high. I think this is the highest point price action has been for this year. That is the 16,055 level. And since price broke out of that key level at the 15,900, sellers have struggled to drop below this area. As you will see throughout last week's trading session, we saw buying niche around this area. All attempt by the sellers to break through was negated by the buyers. And look at what happened here at the beginning of the week. We saw another buy pressure resume around that key level at this point. Now, for me, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for buying opportunities. And if price drops below the key level, we will be looking out for selling opportunities. Now, at this point, price remains above the key level, but one thing I want us to take note here that the week is still very, very early, so we cannot just jump into conclusions that price will continue to find new highs. We are also going to be taking this into consideration the potentials of the sellers too. But one thing I would want us to take note here is how since price action found new high at the 16,055 level, we have seen price action confined within the range of the 16,055 and our key level at the 15,900 area to give us a flat channel, which further emphasizes the level of indecision and uncertainty going on in the market right now. And of course, you know how we do this in our community. Whenever we have a range like this, we want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with this being said here, and as you will see, buy pressure has resumed. And in fact, if we measure the distance of where price action is right now and that resistance line, you can see that it is over 100 pips. And of course, we do not want to be waiting for a whole 100 pips to run through before we start considering buying, of course. So we are going to be looking at how we can actually join early enough, giving us a smaller stop loss range to work with for this buy position even before the breakout of that resistance line happens. But in as much as the buy pressure resumes around this area, don't let us ignore the presence of sellers around the 16,055 level. As you will see, when price got into the structure, we saw some selling niche resume around that area. And in fact, when price action did break out of the 16,055, we saw how that candle closed in the form of a shooting star candle, which reveals the presence of sellers around that area. And then afterwards, we saw our price found lower highs, and we saw price transition into something that is looking like a reversal pattern in the form of a double top structure, where the key level at the 15,900 could serve as the neckline for this pattern, and the breakdown retest will be welcoming selling opportunities. So you can see how crucial the 15,900 is for us for this week, as it will be guiding both the bullish and bearish opportunities. So if price remains above the 15,009, we look out for buying opportunities, and if price breaks down the 15,900, we look out for selling opportunities. Now, with a clear and distinct perspective into the structure on the 4 hours time frame, let's scale down into the 1 hour time frame so we can see how participants have reacted to the 15,900 since the beginning of this week. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. So what I did on the 1 hour time frame was to monitor how participant in the market has played out on this current market structure since the beginning of this week. So this is our key level that we identified on the 1 hour, on the 4 hours time frame, very much intact, as you will see here, and price still remains above the key level, as you will see. Then another thing I noticed here is that the week started on a bearish note, and we saw this candle started at around the 15,965 level, which happens to be the highest level price action has been for this week. Then we saw price drop into the 15,925. We saw some buying attempt happen here before it was broken to the downside into the 15,900, and immediately price tested the key level. We begin to notice consistent buy pressure, bringing price back into that range. So right now we are at a crucial juncture, so we need to exercise patience here. And since we already have a range to work with, we want to be waiting for the signals to happen, which will either come in the form of a breakout of the structure to give us an opportunity to buy, or the breakdown of that structure. Well, for me, I will feel more comfortable selling if price will break down that key level at the 15,900, which of course you remember we talked about how it's going to be serving as the neckline of that potential reversal pattern we identified on the higher time frame. So this is how we are going to be managing the position right now, and it's looking as if buyers are gaining momentum here. As you will see, price came back into that level just as it has been doing since the beginning of the month to incite a bullish momentum. So with a buy stop order above the 15,965, let's see if we're going to be seeing some bullish momentum trigger or kickstart the week here at this point. So buying above the 15,965 will take out all the sell positions that started this week to give us a bullish signal. However, this is where things now becomes a little bit ambiguous when we want to take advantage of a bearish move. Now, if you would ask me, I will say that I want to wait for price to break down the key level at the 15,900 before I join a bearish momentum. However, if we look at the impulsive bearish leg that started last week Thursday, we might likely be able to sell even before price breaks down the 15,900, where this move to the downside here may likely be a retracement to incite a downtrend continuation to the downside. Now, if we are going to be selling, I want to see some series of lower highs and lower lows before I can actually join a bearish momentum before the breakdown of the key level happen. Then if we can identify that is continuous selling pressure persist below the 15,965, we want to be part of a bearish momentum early enough so that we can maximize that move all the way to the downside. Then as soon as it breaks down the 15,900, then we can add more sell positions to our existing trade. So these are my views here on the USTech100 for today. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for this week is the GBPUSD, which has done pretty well since last week's trading session. Remember that we have been buying these assets, and the new week has begun with a period of consolidation as market participants digest the impact of last week's economic data and prepare for the upcoming economic events. During the Asian session, trading was limited within a range for a while, but it seems that there may be a breakout from this range at some point in time, as we can see some bullish momentum begin here. And personally, I'm of the opinion that the upward momentum that started last week may be attributed to the hawkish stance of the Bank of England's official, and currently the market is maintaining that bullish outlook. Now, before we go into the details from a technical standpoint, let's run through the higher time frame so that we can have an holistic perspective into what is really going on in this particular market. So I started my analysis on the daily time frame, where I was able to identify a simple outlook to this market, where I had my key level identified at the 1.26 area. Now, what I did to capitalize to mark out this key level, I took into consideration the nature of price action in the last 6 to 7 months. That is since the month of May, and you will see how the 1.26 area had played a major role in determining the direction of price action. Now, if you look at the month of May, we saw how this area was serving as a selling niche before price action did break out of that level in the month of June. Then since month of June, July, we saw buy pressure above the structure, lasted until the month of August, I think in the month of August, yes. Then in the month of September, we finally witnessed the breakdown of the 1.2600 level, and since that moment, price action had remained below the 1.26 area. Now, in the last couple of weeks, we saw how the bullish momentum, how the pound sterling gained momentum over the last couple of weeks, and then price action gradually approached and closed exactly at that 1.26 area during the course of last week's trading session. And you will see how important this structure is, as what we are going to be doing for this week is to focus on how market participants will be reacting to the 1.2600 area to decide what our next line of action will be. Now, the question going into this week's trading session is, will the bearish momentum that started in the month of July, leading to the breakdown of that key level, become an area where we will be seeing selling pressure resume again to incite the downward continuation? That is one scenario we are going to be looking at for this week. Or are we going to be seeing a situation where the 1.26 will be broken for the first time in about October, November, in about 2 to 3 months, to incite an uptrend move? Now, for us to be able to answer this question, we do want to be scaling down into a lower time frame to see how market participants will be reacting to the structure, and of course have a simple setup that we will be using to guide our trading decisions for the week. Now, To do this, the first thing I did was to scale down into the 4 hours time frame. And on the 4 hours time frame, what I did here was to take into consideration the nature of price action in the last 5 to 6 weeks, which of course reveals that the momentum is very bullish. And as you will see here, price action transition into series of higher highs and higher lows, giving us we have the resistance line of that range right here, and then we have the support line of the ascending channel right here. And right within the ascending channel is a imaginary trend line here, which demarcated the upper half from the lower half. And in recent times, you will see how that middle trend line has been supporting the bullish momentum in the last couple of weeks. As you will see, as you can see, the lower half here has been empty of trading activities, which of course reveals that buyers are pushing price to find new higher highs and higher lows. Now, besides the ascending channel, here is our key level, which interestingly shares a confluence with the resistant line of that the ascending channel. So this is the resistant line of the ascending channel. As you will see, every time price drop comes into that area, we should expect selling momentum to push price to the downside. And look at what has happened here since last week Friday. You can see this consolidation phase going on exactly around that 1.26 level that we identified on the daily time frame. Now, this further emphasizes and confirms how crucial the current juncture we are in right now is. Now, to have a better view into how market participants are reacting to the structure, we scale down into the 1 hour time frame. Now on the 1 hour time frame, things now becomes very clear. Now on the 1 hour time frame, that's the key level. Remember, 1.26 area still very much intact. And one interesting thing about this key level is the fact that price remains above the key level, which is in alignment with an expectations to look out for buying opportunities. Now, besides the range, you will see, beside the key level, you will see that since the week began, we saw our price action was confined within the 1.261100 level and then the 1.25910 area, giving us a flat channel to work with. And of course, you know, when we see this kind of setup on our market structure, we want to remain patient, waiting for either the breakdown of structure to happen to give us selling opportunities, or the breakout of structure to happen to give us buying opportunity. And in fact, in the last 1, 2, 3, 4, 5, 6 hours, we have seen our price are broken out of the resistance line. And in fact, if you had missed out on that opportunity, the market has come back into structure to retest it. And we have been noticing some buy pressure around this area in the last 3 hours. Now, will this momentum be sustained to push price further to the upside, or are prices still going to drop to the downside in an attempt of profit-taking activities? Now, the crucial moment at this point, personally, I already have a buy position as a result of the breakout and retest of structure. And in fact, if you are taking advantage of that one, well done to you for being on standby to capitalize on this move. Let's see how far this momentum will go. Now, if price action continues to climb up, then we also have another level which happens to be the highest point price action has been for this week, which is exactly at the 1.26270 area. Now, I also have a buy stop order above that area. Of course, by the time price gets into the structure, I will be in profit on this particular one. Then I can afford to leverage on the profit I have there to capitalize on the uptrend move. So placing a buy stop order for those who are already in profit makes quite a lot of sense. Then we move our stop losses on the previous position to secure that one. So on this one, I maintain a bullish bias here, considering the the bullish outlook in this market as a result to a weaker US dollar and of course a weaker US Treasury bond yield at the same time. So we maintain a bullish bias here, but if price action will at some point incite selling pressure and then want to continue to the downside, how do we want to capitalize on that one? Well, you know we have our key level at the 1.26 area, and with the structure we identified on the higher time frame, remember that we are at a crucial point where we could actually see selling pressure come in. Now, if we are going to be selling, price must be below the 1.26 area before we can ever consider selling. Then if price goes on to break down the support line at the 1.25910 area, which happens to be the lowest point for this week, then price would have taken out all the buy positions here to give us a signal to go bearish. Now, let's see how the market will play out today. We might likely see a situation where, if we consider the impulsive move here, price could transition into a reversal pattern. Is a very possible scenario where the breakout of the neckline could incite a downtrend move. So we are going to be taking all this into consideration. So we maintain a bullish bias only if price remains above our key level and the 1.26100 area, or look out for selling opportunities at the breakdown of the 1.25910. So you want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. Now, for the sell position, if price drops, remember that we had this ascending trend line on the higher time frame, which we can use as a TP target zone in case price drops to the downside. So let's see how this plays out. Tomorrow we'll be back again to look at how well this asset has been doing. So if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last and final asset on our watch list for this week. All right. So in the absence of no questions, I'll take this as a feedback that we are all good to go. And in that regard, I will be moving on to the next and final asset on our watch list. So the final asset on our watch list for today is my favorite asset amongst in our watch list, and that is the XAUUSD, popularly known as the gold spot. And on this one too, I already have a buy position triggered at this point. And what is it that has led to my decision of buying these assets today? Well, we will be taking an holistic perspective into the current structure, but I would just like to let you know that the new week has commenced with a robust start, marked by a breakout above the key level that we will be talking about around the $2,005 zone, setting a bullish tone for the upcoming days. Now, the question on everyone's mind is, can this momentum be sustained? While the gold prices has retreated from the 6-month high of the $2,018 area, remember, if you look at the structure, you will see that price got into this level during the Asian session. And since it got into that structure, we saw it drop down, got into a consolidation phase. But the fact that price still remains above that 2,000 psychological mark for me hints at a degree of caution ahead of a crucial week dominated by inflation data from the United States. So in that regard, let's look at the higher time frame from a technical standpoint and see what is likely going to happen for today. So my analysis on the XAUUSD started from the daily time frame. Now on the daily time frame, I really do not have much here, but a couple of levels that I used to mark out the nature of price action since the month of May. Now, the important level that we will be using to guide our trading decisions for this week is the $2,005 area. Now, if we go to as far back as the month of March, you will see how the $2,005 area had played a major role in determining the direction of price action. So in the month of March, it was more of a selling niche at some point. Then we saw buy pressure consolidation phase between April, May, and then during the second to the last week of May, we finally saw price break down the 2005 level. And since the month of May till the month of October, that's about 5-6 months, price had been trading below the 2005, which further emphasized the strength of the sellers in this particular point during this particular phase of time. Now, during the first part of the month of November, we saw another new attempt by the buyers to break out of the 2005 area, and as you will see, we saw selling pressure resumed again. Now, during the course of last week's trading session, we saw despite the strong bullish momentum, we saw price come back into the 2005 and just closed exactly at that area, making it for me a crucial point that will determine what the price will be doing for this week. Now that we are at a crucial juncture in this market, we want to be questioning how participants in the market will be reacting to the 2005 level. How are we going to see sudden pressure below the 2005? Maybe to bring price back into the 1935 level, which will be dovetailing to, let's see, about 600 pips in that direction. Or how are we going to be seeing the $2005 level become a new platform that may incite a bullish momentum into the highest point that price action has been for this year, dovetailing to about over 400 pips to catch there. Now, to guide our decisions for this week, I had a simple trading setup identified on the 4 hours time frame. Now, on the 4 hours time frame, what I did was to take into consideration the nature of price action in the last 3 weeks, which of course you will see that it is a bullish momentum, and in fact price action transitioned into an ascending channel, which further emphasized the strength of the buyers. Now, with the connection of the series of higher lows, we have the support line of that ascending channel, and then with the connection of the series of higher highs, we have the resistant line of that channel. Now, this is giving us something to work with for the week, and if price continues to remain within the range, we will continue to look out for buying opportunities. And the only condition that will make me want to consider selling the XAUUSD for this week is for price action to break down the ascending trend line, which will also have broken down the $2005 area to incite a sell-off in this particular market. But at this point in time, we do not want to be considering selling at all, as price still remains within the ascending channel and just right above the support line of the channel. Now, what we want to be doing now is to go into the lower time frame to see how participants are currently reacting to that $2005 level, which happens to be our key level for this week. Now, on the 1 hour time frame, things now becomes a little bit much more clearer. So let me just zoom right into where our center of focus is going to be for today's trading session. Now, the $2005 level still remains very intact. That is it on your the pink line on your screen, then one thing you will notice here is how the week started on a strong bullish note, as we saw price started the week around that $2,050 level, and in fact we saw a massive engulfing candle during the Asian session to take price to as far as the $2,018 mark before we saw it retrace back, and since then it has been within a consolidation phase, which emphasized the level of indecision going on in the market. Now, I had a range identified where I saw price confined within the 2013 and the $2,050 area. Now, when we have a range like this, what do we look out for? Breakout or breakdown to give us an opportunity to trade. And if we consider the fact that price remains above our ascending trend line, above our key level, and of course the bullish momentum that started like 2 months ago, it makes quite a lot of sense to look out for buying opportunities. So in that regard, I had a buy stop order above the $2,013 level, which has finally been triggered at this point. And please note that you do want to be having your stop losses in place between 50 to 60 pips. Makes quite a lot of sense, as you want your stop loss to be close to the key level that we have there. So if price remains above the $2,013 level, we continue to look out for buying opportunity. And if price goes on to break out of the highest level for this week, which is the $2,018 area, we look out for more buying opportunities above that structure to join an uptrend continuation. However, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of sellers. Are we likely going to be seeing some retracement moves to the downside? Well, if we look at the fundamental factors in this market, my analysis suggests that gold may be finding support in the negative sentiment surrounding the US dollar. Now, this pessimism has been fueled by the mixed S&P Global PMI data, leading market participants to speculate on the possibilities of the US Federal Reserve considering monetary policy easing in 2024. Now, these factors may contribute to the strength of safe haven assets such as gold amidst uncertainties in the US dollar and Fed's monetary policy trajectory. Now, in as much as we feel that buyers may sustain this momentum, we cannot ignore the seller's potential as well. So remember, we're looking forward to some major event from the United States this week. We have the GDP data coming in, I think, on Tuesday or Wednesday. We have the first chairman speech during the midweek. Then we also have inflation data, the consumer composite, which is also coming in on Thursday or Friday, I think. So these are very, very high impactful events that will make participants in this market very cautious of placing aggressive bets against the US dollar. So as a result of this, they will want to be waiting to see what especially the first one for the week will come out with. That is the GDP data, which will be giving us an insight into how robust the US economy is for the last quarter. Now, because of this, I want to see us looking at the potentials of sellers too. Now, if we are going to be selling, the only condition that will make us sell here is for price to drop below the $2,050 area, which happens to be the support line of the range we've identified in recently. Now, we may have the potential of joining even before that, but breaking down the $2,050 level is likely going to spiral price action to the downside. But if it so happens that we begin to see signs the buyers are losing momentum, and then we begin to see some series of lower lows and lower highs, like the breakdown leading to the breakdown of the ascending trend line, retesting it, then we could join a bearish move, then maximize the potential of that move by adding more positions at the breakdown of the $2,050 level. So this is how I'm going to be managing my positions on the XAUUSD today. And please let us be mindful and don't let us get too worried if selling pressure resumes here. Remember, we still have the key level here, which shares a confluence with the ascending trend line, and in fact we could still see buy pressure here to continue the uptrend. So everything is still looking very bullish as long as price action is maintained above both the key level at the 2005 and the ascending trend line we identified on the higher time frame. So these are my simple views on the XAUUSD today. So I maintain a bullish bias unless price breaks down the ascending trend line. So if you have any questions as regards to the current setup, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions before we go on to round off on today's trading session. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and it's at this juncture I would like to round off on today's trading session. It has been really a wonderful moment with you guys today, and in fact, we were able during the course of the hour, we were able to deliberate on four major assets for this week, which includes the US USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setup ahead of the New York session using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action. So I do hope we marked out these levels on our chart, which is very, very important as we will be needing them to guide our independent trading decisions. And I encourage you to exercise patience and allow your structures to mature before you jump into any positions today. And also remember that it is very, very important for you to have an adequate and defined risk management strategy which will be consistent with every positions you take from your portfolio. This is very, very important as it allows you to be able to trade another day if the market does not go your way today. Remember that every decisions we make in the financial market is more or less an educated guess. We are only relying on our hedge in the market to make a decision, and until price action hits your TP targets, then you know that you are actually correct with whatever decisions you've made. So it's on this note I wish us all the best of luck, and for those of you who joined us for today's trading session, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. So guys, do have a wonderful day. Hoping to see you same time tomorrow. Trade smart, trade consciously, and I wish you a wonderful evening. Bye bye.